The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials are trading up 50, 60. You get the S&Ps, NASDAQ's up 28. S&Ps are up 7.5. Bottom line, folks, is that we came down fast, furious, all of the above. That took a lot of energy in the marketplace to do that, number one. So you could expect not as much volatility out here today. What I do expect you are going to see, however, is that we had the S&Ps got up 14, 15 bucks. You're at 750 right now. I suspect you're going to see the rest of that also give it up as we move into the trading day. This is a classic bottom line bounce. Sell the bounce when the market's open, and go from there. What we do have is that you came down. It was fast. It was furious. It was all of the above. If we go take a look, and we'll just start with the SPY. You take a look at the SPY. What we have happening is this. This little baby thundered down in an extraordinary way. Volume blew out of it big time. And, what we're doing right now is that we're going after the lowest swing point. Now, the lowest swing point in the SPY, we're right next to it. We're at 206.26. The lowest swing point we're talking about is 204.40. The intriguing thing about this, for the folks that use, whether it's a 50-day moving average or 200, that's going to break a 200-day moving average. That's going to be a heads up for a huge amount of investors and traders, folks, okay? The only last time that we were under the 200-day, and we only stayed under that for 5 days, was where I suspect we want to go at least test, and that's the October of 2014 level. That's the way that's set up right now. And I do expect we're going to get down there. We're going to get down there very quickly. We take a look at the NDX 100. We take a look at the 3Qs, what you have with the 3Qs, the way that 3Qs are set up right now. That also came down fast, furious. The 3Qs right now, which is really intriguing, people are just unloading those babies right now. This is pretty amazing, actually, looking at the 3Qs, because the amount of volume that came in at it is pretty incredible. Now, the Qs have a long way to get down before we'd break that 200. We'd have to get into, we're at 107.25. That would have to get into the 104. I expect we're going to do it, but the bottom line is that is not teetering right on it, where the S&Ps are right on that little baby. If we go over and we take a look at the gold contract, gold's going to be wild out here today, folks, because what you do have is this. Intraday. I'll put this intraday. I like this setup, by the way. If you're trading this, the setup could be a buy now. What you'd want to see, if you're going to hold it all day, is you'd want to see gold close at about 78 or 80, and you're at 1170 right now. Because what it's done is this. It has tested the swing area, first on the daily, dramatically lighter volume. On the intraday, on the 10-minute, it was a beautiful test. When we're talking a test, watch how this tested it. What we're doing is this. We're testing. Let me pull this over here so you can see exactly what we're doing. There she is. The first draft down, folks, was testing the 26th of June. We hit the 1167.10. We had contract volume there of 6,600. That's what we were testing out here this morning. The first time that we came down, we got with 5,100. Then we just tested that baby, and we tested it with 2,000. And then what we did, we had a small sign of strength on the 10-minute. The 10-minute, you went topside, and we did that with 3,500. So that's telling me that, we are going to have volatility inside the currency market and inside gold. And I suspect we're going to see some faster movement and higher movement, and I expect that today. We're going to take a look at the oil market out here. CLQ5. What we have with oil, oil is trading at the 55.93 right now. We've got to 57.94, and let's see how we get down there. Yeah, that was in the middle of the night. There was nothing there. So right now what you're doing is you're testing the highs that were generated out here yesterday, and you're testing them. The first get-go up was 9,000 versus 10,002. Oil doesn't have the juice also to get up into and over that gap. Bonds are a different animal, man. Bonds are a trip. You know, we saw the bond market last week. If I put up the TLT for a second, you saw the bond market. What the bond market had been doing is last week you had two separate days of strength. The way that setup was happening, and you know, this is in the middle of doing an ABC structure on the way down. Bottom line, I suspect now what you're going to see is that number one, they definitely want higher price now. You know, I suspect they can run all the way. The TLT, we're at 118.07. That baby can run all the way up to this 124.87 in about a heartbeat. And what that's going to be specifically, that's going to be the amount of bread that is moving out of equities, getting into, you know, a safer vehicle. Over in Greece, the whole, you know, you're going to have story after story. Just about 10 minutes ago, their prime minister asked for aid from the European Stability Mechanism. According to a statement from his office, the request is to cover all the country's financial needs for the next 2 years. Along with debt restructuring plan, the government aid said the government will continue negotiations seeking a viable agreement with the euro area. A spokesman for German Chancellor Angela Merkel pointed to her comments earlier today before the Greek request was made, noting that the current bailout expires at midnight tonight and there were no relevant indications otherwise. The move is the latest attempt in Greece to force the hand of the international creditors after talks broke down. Greek government said that they will miss the International Monetary Fund's payment. That was a no-brainer. You blow my mind. Is that, you know, I don't even quite understand why. You know, people were speculating whether they were going to make the payment today. What will happen is this, and this is so you can see how bureaucracies move. They will claim that the European, the IMF will claim that they didn't default. They didn't default. They're going to put them in arrears. That's what they're going to do. If you listen to Lagarde, she wasn't using the word default. I heard her on Sunday. I was wondering why she was using the word arrears versus default. Bottom line is that they're going to use that word specifically because when we're talking language, that will still give them an opening to basically funnel some bread into them. That's how that whole thing shakes out. 877-927-6648. We get over and look at these S&Ps, and they're giving it up pretty quickly out here today, too, by the way, folks. You've already given up 10 points. We have, in the first sell was pretty dramatic, too, by the way. If we take a look at this on a 10-minute basis, there she goes. What you're going to see is that the intraday, that first, here it is right now. So your first sell down, in fact, we're still in it. We've already done 56,000 contracts. How many were, you got, let's see, you're at 7 minutes into it, man. This is a lot of contracts, man. Oh, no, hold it, 1 second. ESU 5. Sorry, I just had oil up. ESU 5. Okay. There she is, okay. Okay, so your first sell down, yeah, you had big contracts. Okay, so we popped into a high out here at 920 with 2,900 contracts. That was testing the first pop-up of 0530 this morning with 7,400, and then boom. Then they just hit them with 94,000 contracts. You know, and what this is doing right now, folks, this is building cause right now to basically try to get under the 2053 level. what I expect you're going to see, this is a classic setup, by the way, to do a much larger ABC down. What we do have is that when we were coming into the close just there, 15-30 hours, at a price point of 2047, guess what? We have high volume intraday swing low. You get a high volume intraday swing low, that's where this baby wants to go. Inside the Dow Industrials, give you the strength versus the weakness. This is what you have happening out here. Inside the Dow, the strength is Home Depot. Home Depot is up 97 cents. Apple's up $1.10. ExxonMobil's up 56, and Disney is up 72. Taking it away, Microsoft is down 28. You get Pfizer off 19. Cisco's down 13, and Merck is off 20. Inside the NDX 100, what do we have? The leader inside the NDX 100 is Win. That's up 484. That's really a dead cat bounce. Priceline is up $28 at 1158. Illumina is up 423. Tesla's up 454. Taken away from it, on the way down, SanDisk down 94. You get Western Digital's off 65. NXPI is down $1, and you get Alexa Pharmaceutical off 157. If we go over to the IBB, now what's so wild about the IBB, folks, is that, yeah, it was down yesterday, but let me tell you something, man, this thing hasn't fallen apart yet. If you think that yesterday was bad in the NASDAQ, wait till the IBB falls apart. You know, the IBB right now is up 356. You know, and the volume wasn't even that dramatic yesterday on the way down. It was an expansion of volume, but it wasn't that dramatic. The IBB, folks, does want dramatically lower price. Bottom line, the financials fell apart yesterday. I suspect the IBB will be next. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back. Dow up 50, NASDAQ up 23, S&P's up 5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's take a look at some of the Dow stocks out here. You got American Express up 19, Exxon's up 50. You got DuPont up 5 cents. Big Blue is down 37. You have Johnson & Johnson up 57. Walmart's down 9. Walmart, folks, is going to make it. Walmart is going back into the lower range. We're at 71.33. It's 70.25. It's going to be a mind blower watching Walmart come into that range, folks, because with that saying, after a 12-year consolidation, being above the range for 2 years, and it's going to put back inside the range, man, I'm not sure what's going on with Walmart, but evidently we're not shopping at Walmart anymore. Let's go to Victor in Paramus, New Jersey. Hey, Victor, what's going on?
Yeah, I was going to look at Nike and Intel, but also I read tomorrow is a Bradley turn date. You think it could be a low tomorrow?
Yeah, that's easy. I mean, a low, you mean a short-term low?
Well, I don't know. It just says there's a Bradley turn date tomorrow, and the last one was a low, and this one was a low, and he bounced off it. And
that's something that I'd have to ask Larry about. I mean,
yeah, ask Larry later. Yeah.
Well, what does happen with turn dates is this: is that that would say that it depends on what that turn is and when the next date is. You know,
July 1st was the last one was a low. You know, all the Bradley did. I watched this guy's website and all the low. You know what I mean? The
okay.
Bradley turn dates have been the lows, so I don't know. Maybe tomorrow's a low and they bounce.
Well, what happens with so this is what happens with a Bradley turn date, folks, right? If you're going down and you come into a Bradley date, you should turn. They go up. If you're going up, you turn. They do get inverted, but the bottom line is that over the course of time, these things have been pretty accurate. So it's probability like anything else, but it's something to pay attention to, no doubt. And when I was listening to Larry this morning, too, I believe that we have there's a couple stars that are coming very close to each other, you know, which makes changes happen in the marketplace. That's just what it comes down. Not just in the marketplace, in everything, basically.
Yeah, okay. And check out Nike and Intel if you get a chance.
Well, you get Nike. I mean, Nike's strong, man. You know, this equity has been doing multiple ABC structures on the way up. And
you don't think they cook their books?
No.
They got it. They're the only company that's doing good with the difference in the dollar and the euro and all that. They got to cook their books. Come on.
Well, picture this, okay? You know, this is a great question, by the way, okay? And it's not so much about cooking the books, but about the business type of plan. I remember in the 80s, okay? You know, now you're from New Jersey. You know, I'm from Boston, right? All the shoes, folks, used to get made in New England. Okay, and I remember when I don't remember when those plants closed because that was when I was too young. But as they were just closing, as all these companies were going to Asia, opening, I happened to be there. And what blew my mind, absolutely blew my mind, at that point, most of them were in Korea. And I was in Korea. And I couldn't believe that you could buy Nikes and anything you wanted for 50 cents to $1. And they were beautiful, right? I'm saying to myself, oh my God, I never knew there was so much money inside the sneaker business, the tennis shoe business, and all of the above, right? That hasn't changed. The amazing part about it, all that's changed is this. What has changed is the amount of money that the world will pay for athletic gear. You know, so their profit is so astronomical, man. I can see how they can print money on a continual basis. You know, so
Yeah.
you know, and when you look, listen, when you look at their stuff, you know, everything, it's light, you know, but guess what? People are paying $200, $250 for sneakers, man. So, you know, Nike to me, well, you can see it even in this market that got croaked yesterday. You know, Nike's something that continues to want to go higher. Now, Intel's a different animal. You know,
Yeah.
If we
But what
take,
about the PE on Nike? It has a pretty lofty PE, you know?
let's take a look.
And it has a few gaps. It has 2 gaps, so one more gap, and it's done.
Oh, listen, they'll do retracements. You know what I mean? Well, you get. Let's see. Where am I? Oh, this will blow your mind. No, you know what? Okay, so the PE is 29, right?
Right.
But they're growing at a clip of. Let's see, growth estimated PE.
So they're going to grow by 3%, the revenue.
Yeah, no, it's not. It's not that much actually. 5-year growth is 15%. You know, so that's a high PE. There's no doubt that's a high PE. Yeah.
Should you watch out for it?
No, I would no. There's so many more stocks you can short and make money in this market, man. Don't short.
No, I wouldn't short that one. I'm saying no. I'm saying that someday it's going to have a. Right, it has to fizzle a little someday. No?
Oh yeah, and I'd buy it. Yeah, that's the way to look at Nike, man.
Yeah.
Cooking.
When you get a chance.
Okay, we'll do it so once we come back. Stay right there, folks. Come right back. Dow Industrials up 73, Nasdaq up 28, S&Ps are up 7.5. We're gonna be right back.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And folks, don't forget, at TFNN, we start live programming every trading day, 8 o'clock in the morning. We're up at 6. We start at 8, though. Bottom line, start at 8. We get our man, Mr. John Logan, kicking us off. We go to 6 in the afternoon. And when we talk John Logan, folks, you come over to our website, and you're going to see a piece of software that's just absolutely phenomenal. And when you take a look at this, we're doing this a little bit different this time. Because we want everyone to test drive this piece of software. And what we're talking about is we're talking about the TAS Profile Scanner Plus. If you come over to our website, you'll see how this, number one, you'll be able to test drive it, 14 days, absolutely free. There's videos there. Pay attention to the videos, folks, and then listen to his program. It's very powerful. In the markets that we're in right now, which is so cool, it doesn't matter whether you're a bull or a bear, by the way, okay? It'll find the strongest stocks in the market. It'll show you the weakest stocks in the market. It will show you the breadth of the market using the profiles. And the profiles, folks, are something that Peter Stottlemyre put together in the 70s, and he was at the CBOE. So it's a price and volume, basically, scale. That's what, you know, if you cut to the chase, it's like a bell curve, and they talk about, you know, point of control, value, and all of this. Bottom line is that what the probability is that where are the most amount of buyers and where are the most amount of sellers. That's kind of how this thing shakes out. It's defined, and the defining of it is pretty cool. What John has done, what no one has done, is the breadth magnitude, meaning, okay, so he takes the indice number one, then he'll going to give you a gauge as to how many equities are under the profile versus over the profile, and he puts those in the speed gauge so that you can look at it very quickly and say, okay, we have so many equities right now that are over the profiles, and if they're over the profiles, your probability is higher that, guess what, you're going to go higher. You have a probability they're going to be under the profile, they're going to go lower. You can break that down into a 60, into a 240, meaning minute, a daily, and a weekly. Bottom line, check it out. It's free. 2 full weeks. Go through those videos, folks, okay? And then listen to his program, because it's an awesome program. You'll learn a lot, you know, and we've got some fabulous programming, you know, each and every day right here at TFNN. If you do enjoy it, please tell 3 friends. Let's go over and we take a look at Intel. So what do we have with Intel? Intel is coming into its lows. The low that we're talking about right now, Intel's already gone from 38 to 30. It has a high volume low that's hanging out here at 29.31. Let me put this on a weekly for a second. Let's see what we have. Let's see. Oh, this is so cool, man. I'm so glad Victor called. Check this out. This is heavy, man. Okay. So the October 2014 level, folks, okay, you know, we've been talking about this for a long time. Equities have gone down to it, many equities. The first indice that has gone down to it was the transportation. Well, Intel is already there. The low of that, the high of that is 32.63. Now, Intel came off the high of 37. The high of that is 32.63. The low is 29.65. Now, we'll see whether we get volume as we're into that, but guess what? That's where that baby's going. And if you break that with volume, I suspect what it's going to try to do now is going to build a little cause. But if you break that with volume, Intel's going to be hanging out there at $27. So that in itself is going to be pretty tough. We go over to the transports because the transports is the first major indice that is into that number one. And the way you gauge these, the way that I like to gauge them is this. You wait for it to get down there first. The volume characteristic is going to tell you how you're hitting it. You hitting this with force or you're hitting it with not force. Bottom line, at this particular point, we have force being picked up. The number is pretty intense, meaning there's 130 million shares down there. And for the transports, that's a big number because the transports, it's not like they do a lot of volume. They don't. The individual stocks do, but the transport index itself doesn't. But you're broken, and you're at 8108, and that's saying that we're going to go to 7,700. You know, that in itself is a huge heads up. Why? Because UNP, because these rails just can't stop. They're just going down on a continual basis. And in fact, if you look, yesterday what we did have is this, that we had the financials finally broke, BRK. If you want to see Berkshire Hathaway, now this is the largest weighting structure inside the XLF. The Berkshire Hathaway yesterday broke with volume. It's an ABC structure on the way down, and it's a good size one too. Your A point on this is 148. Your B is 138, so it's $10. Your C is 142. That gives you a 132. You broke downtown, broke with. This is a classic ABC. 6.7 million shares was breaking 2.8. You know, bottom line, that'll finish up that ABC structure first. On a longer-term basis, Berkshire Hathaway, man, this thing got a long way to fall. Yeah, I mean, you're at 136. 122 is next. And you break 122 and you're talking $75, man. So, yeah, you're already, this thing is going to go to 122 right now. Let's go and take a look at the XLF. The XLF, yeah, this can't hold it either. The XLF came down with juice yesterday. We came down with 42 million shares. The XLF is making its way down to this 2289. That's 2 points down. Now, that's the lot. But I suspect where the XLF is going to, yeah, the XLF is going after the October level also. That October level, it's real simple. The October level, folks, whatever equities you own, just look at where the October level is. Put your stops in, because if you stay in this market, I suspect what you're going to see is that these downdrafts are so dramatic and so quick. That's just how markets go down. You know, if we go over to, if you want to see a market, Shanghai last night was down 5% in the first session. It was up 10% in the second session, so it ended up closing up 5.5%. But what you had, and this is a classic. Okay, so this one here, this is a classic. I heard Dave talking about a DiNapoli double repo. This is a double repo. What a double repo is that you go down, you come right back, right? Guess what? Now what you do with that is you sell the 0.618 off of that. So let me get the 6.618. Watch this. This is going to be a trip watching this shake out. So on this one here, in Shanghai, you'd be hoping that you're at 42.77. What you'd be looking for is you'd be looking to sell 46.78. That's what you'd be looking for. So we'll see how this double repo works out. But this is a classic, man. You know, you get down, saves itself, goes all the way back up. You sell that level, put your stop on the other side, and bottom line is you can get to that low once again. And what we do have is just when we look at the volume, we actually came down last night with 70 billion shares. Saved itself, but what you have is this. You have a lower low with volume. What does that set up? That sets up a retest of that lower low. Over in Europe right now, DAX, that can't hold price. FTSE can't hold price. FTSE is out here. FTSE's trading, got down to 65.40. You're down 60 bucks right now. And you got to remember, we're coming into Wednesday. Our markets only open Wednesday and Thursday. And Thursday is going to be like a no-brainer, folks. Thursday, I suspect, is going to be a slow market. We'll see how this shakes out, because what we do have is that when we used so much energy yesterday, you know, I expect we're going to be red, but I don't think we're going to be red by a huge amount. Dow might be down 50, 100. S&Ps could be off 4 to 8. Excuse me, folks. We'll see how that shakes out, but I do expect it's going to give everything up. The S&Ps thus far have already given up 12 points. You know, we're at 2050. And if we take a look at that intraday and see how we're breaking into these lower levels. So we have, let me see this, ESU5. Okay, so your E-mini is going to need, she's going to need more volume to break down here. What's holding it up is this. Oh, check this out. This is so cool, man. Okay, so what's holding this up, at 15:30 yesterday, coming into the close, right? The high of the downdraft, when we went from 53 to 47, right at the close, the 53 is holding it up. The 53, we have 152,000 contracts. So what you can expect here is that you can expect sideways movement. It'll build some cause to get into that. The longer that we stay, right now we're at 54.75. Once you get into 53.25, the longer that you stay there, if we keep continuing sideways, that's going to be building a cause, and have to go slam the 2047 level. That's how this shakes out. Thus far, there's not enough juice to break it down, you know, because you're 152,000 contracts. That's a monster. The first time we came into it, we only came into it with 50,000, 55,000. You know, so I expect we're going to be laying out here for a bit. You know, build some cause in order to get in, and more than likely go right after that level. If I take a look at the SPY, and I'll set that up for you on the SPY in case you only have equities, intraday, what you're looking at in the SPY is you're just filling the gap. But the SPY will also need monster volume, because, okay, so the top of the SPY is 205.91, and we've hit 205.88. The characteristic there is at 19 million on the 10-minute, and the first time we hit it, we only hit it with 3.2 million. So you can see that correlation of how, what does happen is this, which is pretty cool, folks, is that downdrafts themselves, okay, when you go down, what ends up happening is that the high of that downdraft saves the market the next time that it comes down, unless you're going to build cause. That, you know, it's all about energy. It's energy on the way up. It's energy on the way down. So that's where we are inside the marketplace right now. The correlation of how we go up, you just take the opposite of that correlation, and if we took the opposite of that correlation inside the SPY, because let's say that you're a bull out there to say, okay, I think this market's going to go up. What you're going to need is this. You're going to need that you're coming into the first get-go on the way up today, we had 6.5 million shares. Well, that's not bad, by the way, okay? You need about 7.5 million. And where I'm going with that 7.5 million, that is where we came down from yesterday. See, how we came down yesterday at the 207.80 mark, that is also one of your benchmarks that won't be hard to get through, because that's not a huge amount of juice. It's going to be harder to get through the downdraft part of it today than it would be to get the updraft. You know, the way Europe is trading right now, though, I don't think we have to worry about that because Europe only has another 40 minutes to get anything going. And thus far, the only thing Europe is getting going is getting more pressure on the downside. If we go over and we take a look at the U.S., you want to keep your eye on these bonds, too. See, the bonds are actually a week ahead of it. I am so psyched about these bonds. The reason being is this. You're trying to glean any type of information you can get out of the marketplace. The bond market last week gave it to us. And specifically, you know, you had a large ABC structure on the way down. It didn't do the full price projection. It negated it because you had two signs of strength last week. We definitely negated it yesterday because we went wide price spread, accelerated volume on the way up. So that type of information is what? That type of information is that you're going to have money bailing out of the equity markets worldwide and bailing into safety. That's a huge amount of information. That's the first part. The second part is actually a little bit bigger. And what that is that it started giving us that information last week. So what did that mean last week? That means that last week there were operators that were unloading portfolios. As they were unloading portfolios, they just wanted to make sure they could get their money back. That's how that thing was shaken out. So when you take that context, it's like the more folks that bail out of the marketplace, what does that mean? Less buyers, and it means more supply as supply keeps continuing coming on the marketplace. You put that together with the aspect that you have a down market, what does that set up? Bottom line, folks, that sets up lower prices. You're in window dressing, but guess what? It's window breaking versus window dressing. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is up 36. NASDAQ is up 15. S&Ps are up 2. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Welcome back, folks. Right now, you get the S&Ps. They're building cars. That's the bottom line. Right where we're talking about at this 53 level. Let's just bring them up quickly once again. You'll see how this works out. Now, see. Okay, so watch this. This is what's really cool. So when you're building cars, the correlation as to are you going to get a breakdown or not, probability-wise, goes like this. We got down to the last spike, just took us to the 50 level, okay? And we know that the bottom of that is 47, okay? We know that 47 from yesterday has monster volume, okay? So it makes, you're going to need to break that with volume, okay, in order to get the lower price. You can break it with price, but what ends up happening is that you have to build some cause. The cause that we've had thus far, the last time that we had really cause on the way down, is at the 55 level. So now we're at 54. So all you do is you flip that around, and as you're going up into 55, what you're going to be looking for is that can you get into the 55 level? Actually, can you get into the 57 level? It's 57. Can you get in there with more than 72,000 contracts? So let's say we get a bounce up to 57. If you can't get into that level with more than 57,000. I use 10-minute charts, by the way, on an intraday basis. If you can't get into that with more than 57,000, and what you'd like to see, if you're bullish, you want to see 65, 60, somewhere around there, okay? If you're bearish, you're going to see like 50, 45. You see that, you see a rejection of price, bang, hit it again, okay? Because what's going to happen then, it's going to flip right down the other side, and then it's going to try to take out the other side of it. As you get down the other side of it, what you're going to be looking for, do you get an expansion of volume as you come into the lows once again? If you don't get an expansion of volume, what that sets up is that it's going to make another run topside again. And that's all the market keeps doing, folks, on a continual basis. What does happen is this. Markets that are fast like this, you can learn so much more and so much less time. Because what happens is that the movement both ways is very fast, and you'll see the price along with the volume, and you'll see the power or the weakness inside the markets. It shows up much quicker. So I suspect we're going to be in a market like this for quite a while. Once you get in a market like this, it could be a year and a half. That's how it kind of shakes out, particularly after we've been in a trending market that has been up for 5 years. You get something like that, yeah, you can get into a year and a half's not a huge amount of time, and you'll get some wild bounces, man. I mean, what we had out here yesterday is that you had absolutely no fear. The VIX went up, but the bottom line is that there was zero fear inside the marketplace. You had zero ticks, meaning we had no monster negative ticks. In fact, this morning, this is music to a bear's ear. This morning we had a plus 1132. There's no way we should get a plus 1132 in a market like this. That means that when the market was up once again, people dove in again and bought again. And what you'll see there, because of that, is that into the close out here today, you're going to see them get toasted and roasted once again. So what you can expect into this close out here today is more selling coming into the close. You know, that will happen because as the market went up, people were looking, buy it, buy it, buy it. They bought it, just like they bought it yesterday. And what ends up happening now, they're in a losing position. They won't get out of that probably until the end of the day. That's just kind of how it shakes out. And that's a huge deal, folks, because that you still have lots of prop places right across the world. That's the real bottom line. Don't forget, folks, 12 o'clock, Kevin Hinks, amazing trader, amazing educator, TD Ameritrade, Thinkorswim, the option hour. Have a great one. Have a safe one. Look forward to speaking to you this afternoon. Wow! Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.